What is going on, everybody? Welcome back to another dividends video. In this one, we want to go over STAG Industrial. With that being said, let's not wait on anything. Let's cue the intro and get right into this video. Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's going to help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video. Okay guys, STAG Industries. A lot of people have seen this one. There is a ton of different stuff on it, and we've always start out by talking, is there a capital appreciation, or is it at least going to stay flat for me so I'm not going to lose my principal, which is the first money that you put into it, and then the money that you're going to continue to put into it more than likely if you're a dividend investor. So that's something that I'm always looking for. And again, you guys can go and do a couple different things here. I use Thinkorswim a lot. Right now we're using Seeking Alpha. If you guys want to know what this website is, it's pretty simple. So again, we want to look at the max, not just the year to date. The year to date is going to be kind of deceiving this year, negative 10%, and then max. Here, you're at 247.78%, and it was inducted, I believe, in 2011 at IP. So with this one is a good company, actually, guys. I actually like them quite a bit, and you guys can go more into what they're going to do and stuff like that. But the one thing I like to look at is financials. I want to know whether or not they're profitable, what they're going to be looking forward to, what they're going to be paying me a month, has their dividend grown, things like that. So those are questions that I'm going to answer during this. So when we go on ahead and look at this, is the first one we want to look at, and me being a dividend investor, is I want to see their history of dividends paid. So as you can see, they do pay monthly dividends, as you can see here all the way through. So this one, 09, 08, 10, they're paying it every month. And the other thing you can see right away from just looking at a few of these is it increases pretty much every single year, which is a very big thing here. Mainly because I'm fine with stocks like HRZN that basically are not growing their dividend at all, but it's also not, the stock isn't growing, which means I'm getting monthly dividend income pretty much every single month. It's a little bit of a cheaper stock, and I'm able to get more shares, which means I'm able to get more of that compounding effect out of it, which I'm fine with, and I like HRZN, as you guys have seen in my other videos if you've watched any of them. This one, though, as you can see, it looks like it went back to 2013, and the first one ever was 30 cents. Probably a fluke here, or they just had that much extra capital on that first one. So, but you go to 10 cents here, and then it stays at 10 cents, and you can see here, then the very, very next year, which is only a couple months later, actually, because it looks like they started on 09 of 2013, so it started 2014, boom, they instantly put it up half a cent, which, guys, I know that's not a lot, but it's going to get you extra shares the more you allow this to snowball and compound. So those are things that I am looking for here. And you guys can see it stays very, very consistent, and then boom, all of a sudden another year we're up another half cent. And then it does slow down here a little bit, as you guys can notice, and we start getting to 11. Right now I believe we're at 12 something, but it is still growing, and that's something that I really do like here. And right now you're at about 12.2, which, I mean, this 0.2 is really not going to make a huge difference, but it does show that it's still growing that dividend. So your dividend yield's only about 3.5% right here, which is okay. It's mainly, I say it's okay because it's still going up in value, which is a huge thing. You're talking, this stock is $42.22. You're getting about 12 cents per share of dividend every single month, and if you're getting it monthly, not quarterly, which means that dividend's going to grow a little bit faster than that account's going to grow a little bit faster than what it would be if it was quarterly. Not a ton faster, but it will compound faster. Like, for instance, if you had a stock that's going to pay dividends daily or weekly, it's going to compound a little bit faster if you're looking at the same numbers. Numbers to numbers, don't compare apples to oranges. But that's how it would work. So we have that, we covered that. Now, I also want to cover this when it comes down to STAG Industries. Over here on the right-hand side is the EPS, basically earnings. And these are what's expected, these blue ones over here, and then the green is where they've actually put. So, and this is per share. So 13 cents is what the actual was. The estimated was only 11 cents per share. So we've beaten earnings continuously, and you guys can look further into that. And the other one I look at is revenues. And again, you guys can look at it over here, but this little chart over here on the right-hand side breaks it down pretty much a lot easier for you. So again, revenue is very, very high, and then you get your actual earnings for the actual company, which is 92.3 million. And as you go over, you're looking at 192.33 million in 2021. It doesn't show 2022 yet, and I'm sure you can go into it. But these are just charts that I am looking at. Now, again, you guys know me. I like to look at everything overall. So go back up here. We're investing $10,000 and put $500 in it every single month just because that's the monthly average car payment. That's why I think and a lot of you guys can get rid of your nicer cars and you guys can get beaters. I know I've done it before, and just invest more money into the market. It's going to pay you more. That car is just going to keep depreciating in value. So we're going to look at these overall, and again, you guys can see the totals. It basically reflects off this. So STAG is actually going to outproduce SPY since 2014 if you're reinvesting the dividends. You're not pulling any of it out. Me, I don't recommend you guys pulling any of it out unless you're ready to live on it, or you absolutely have to have that money. So $10,000 and $500 a month ends up being over the next, it's a little under 10 years, I believe. No, yeah, you're a little under 10 years is going to end up being a little over 122,000 for SPY. QYLD is only going to be 90,000. Guys got to remember that. And then STAG's 129,000. So it is going to actually outproduce SPY, which is like the gold standard S&P 500. If you have a 401k, that's basically what you're investing into, just so you guys all know that. And that shows annual returns. Now, again, if you're at this video, you are looking at income. This is what we're all here for, is we want to boost that dividend income. That's why we invest into dividend stocks and continue to grow our money. Now again, QYLD is going to do more, but again, when you look at this, what do you want more? Do you want more income, or do you want income and steady growth out of it? STAG is going to give you more of that steady growth. It does dip back in here, but you're going to get more for your money out of STAG through this. Now QYLD is going to give you more income. So that is up to you. And again, QYLD seems to be paying out very, very rapidly, which is good for most people. Me, I want the best of both worlds. I will take a little bit less of a return to make sure that my principal is safe. And again, that's why I like HRZN. It fluctuates. Maybe 1 week I buy a little bit of a higher price. Maybe 1 week I buy a normal price. 1 week I buy a little bit of a lower price. So it averages out. This one, QYLD, guys, as it just continuously went down over time. It has spikes where it goes up and then it goes down twice as much. That's why I say that. So QYLD is going to give you more income. I'm not going to lie to you guys. Even with $10,000 your first year, you're going to make $1,300 in dividend income. So it means you're making a 10%. You're making a 10% profit, or actually like a 13% profit, but you're also losing on principal. So remember that. But here then you have this. And another thing that we can do here is if we just took it, and this is something that I think a lot of people should do, is get rid of this. Get rid of this completely. Say you're just starting with 10,000. Look at the stock by itself without investing more and more into it. So, portfolio income, QYLD still makes $1,000 something the first year. And then all of a sudden, you're at $1,000. See, and that's the thing that scares me here. QYLD is at 1,058, and then 1,000, and then 1,000. And then it slowly starts creeping back up, and it did. QYLD is going to do very, very, very well in down markets. That is the difference here because it's a covered call strategy. STAG, on the other hand, is not going to do quite as well. Their dividends are going to stay the same, so you're still going to have continuously upwards income from STAG, but you're also going to have you're if you look at this right here as the perfect example, this is the yield curve on it. QILD is obviously going to be quite a bit less just because of that, because you're not putting more money into it. So you get to make your decision on this stock here. I think STAG is a very, very solid play. Again, if you're looking for a down market kind of play, QILD is probably going to create you quite a bit of income from it. I don't think it's a year-round play or an all-the-time play. Again, I have owned QILD, I have sold QILD and bought back in and different things. I think if you're looking for something just consistent and you don't have time and you don't want to mess with buying in and out of stocks like I do, STAG is a great company just to continuously go up. And as you can see, if you put $10,000 in, the yield curve on STAG is higher than the S&P because the S&P is the blue line and STAG is the yellow line, and you're going to end up getting a better income situation out of it as well. So with that being said, thank you guys all for watching this video. I hope this helps somebody else out there, and I will see you guys in the next video.